Bitcoin has shattered its previous all-time high, soaring past $123,000 today, driven by significant ETF inflows and a more favorable regulatory environment in the US. What does this mean for investors and the future of cryptocurrency? As we look ahead, the critical question is whether Bitcoin can maintain its position above the previous breakout zone of $123,000. This price point has become a focal area for traders and investors alike, marking a significant psychological threshold. In the coming days, all eyes will be on Crypto Week in Washington, D.C., where lawmakers are set to engage in crucial discussions regarding cryptocurrency regulations. The outcome of these discussions could have far-reaching implications for the crypto market. Successful navigation through regulatory frameworks could not only solidify Bitcoin's bullish momentum, but also pave the way for increased institutional investment, which has been a significant driver of the asset's recent surge. Experts predict that if exchange-traded fund ETF inflows continue at their current pace and positive regulatory news surfaces, Bitcoin could see further price appreciation, potentially breaking through the psychological resistance of $130,000. However, the stakes are high. Should legislative efforts stall, or if inflows begin to decelerate, the risk of a swift correction looms large. Market sentiment is heavily influenced by regulatory clarity, and any signs of indecision could trigger a sell-off among investors wary of volatility. Therefore, it is imperative for market participants to closely monitor upcoming announcements from regulatory bodies, as well as the broader market's reaction to any news related to the cryptocurrency sector. The future trajectory of Bitcoin hangs in the balance, caught between optimism for potential regulatory advancements and the ever-present threat of market correction. As the discussions in Washington unfold, the cryptocurrency community is eager to see if Bitcoin's ascent will continue or if it will face a significant downturn. Investors should prepare for volatility as the landscape evolves, with the potential for Bitcoin to redefine its all-time high in the near future. To understand how Bitcoin reached this new all-time high, we must consider the broader context of the cryptocurrency market over the past few months. Since early 2026, there has been a noticeable shift in investor sentiment, characterized by a risk-on environment, as global markets showed signs of recovery following a tumultuous economic period. This favorable climate has allowed Bitcoin's total market capitalization to rise sharply, attracting the attention of institutional investors who had previously remained cautious. Key decisions made by major financial institutions, including the launch of Bitcoin exchange-traded funds, ETFs, have played a crucial role in this development, providing a regulated avenue for mainstream investors. The regulatory landscape has also been evolving significantly. Recent discussions around crypto market structures, stablecoins, and potential regulatory frameworks have contributed to a sense of optimism among investors. Unlike previous price surges, which were often fueled by speculative trading and market hype, this rally appears to be underpinned by genuine institutional interest and a desire for clearer regulations. The combination of these factors has paved the way for Bitcoin's current position, setting the stage for potential future growth. The impact of this surge goes beyond just price levels. It signals a maturation of the cryptocurrency market, where institutional adoption may lead to increased stability. As Bitcoin continues to capture the attention of both retail and institutional investors, we may see further innovations in financial products linked to cryptocurrencies. Looking ahead, the ongoing dialogue around regulatory clarity and the continuous integration of Bitcoin into traditional finance could propel its value even higher. With institutions now more involved than ever, Bitcoin's trajectory may not only redefine its own future, but also reshape the entire financial landscape. The recent surge of Bitcoin, surpassing the $123,000 mark, marks a pivotal moment in the cryptocurrency landscape. This significant price movement has far-reaching implications for both the digital currency market and individual investors. As Bitcoin's value climbs, it not only instills a renewed sense of investor confidence, but also enhances overall market sentiment. This rise can be attributed to various factors, including increasing adoption of cryptocurrencies by major financial institutions and a growing acceptance of digital assets among retail investors. With Bitcoin leading the charge, major altcoins and crypto equities are poised to benefit from increased liquidity as investors broaden their focus to encompass the entire market. This phenomenon is often referred to as a bull market, where rising prices in one sector encourage investment across the board. The substantial inflow of capital into Bitcoin exchange-traded funds, or ETFs, underscores the strong institutional demand for Bitcoin. This trend indicates that large-scale investors are increasingly optimistic about Bitcoin's future growth potential. Historically, institutional investment has been a critical driver of price increases in cryptocurrencies, as these entities bring substantial capital and credibility to the market. Moreover, ongoing discussions in Washington concerning cryptocurrency regulations could pave the way for greater clarity and acceptance of digital assets. This regulatory framework is vital for potential investors, as uncertainty has often deterred individuals from entering the market. The implications of this Bitcoin breakout extend beyond just financial metrics. It signifies a cultural shift toward the mainstream acceptance of cryptocurrency. As digital currencies gain traction, they open the door to new investment opportunities and innovations within the fintech sector. The average person should be attentive to these developments, as they may lead to enhanced financial products and services that leverage blockchain technology. Looking ahead, the trajectory of Bitcoin will likely influence the entire cryptocurrency ecosystem. A bullish Bitcoin market often acts as a catalyst for growth within the broader crypto space, suggesting that this breakout could be a defining moment for digital currencies. Investors should remain vigilant, as the evolving landscape of cryptocurrency regulations and institutional interest may create a fertile environment for further advancements. The potential for Bitcoin to solidify its position as a mainstream financial asset appears increasingly promising, especially as global interest continues to rise. On June 3, 2026, Bitcoin reached an unprecedented price of over $123,000 during trading hours, marking a significant milestone for the cryptocurrency. This price surge represents a continuation of a recent rally, emphasizing Bitcoin's growing strength in the market. Earlier today, Bitcoin briefly touched $122,800 before consolidating its gains. The catalyst behind this monumental price movement has been identified as strong inflows into exchange-traded funds, ETFs, focused on Bitcoin and the overall cryptocurrency market. Notably, Ethereum ETFs recorded a staggering single-day inflow exceeding $1 billion, indicating heightened institutional interest. This trend reflects a broader acceptance of cryptocurrencies as legitimate investment vehicles, a shift that has been gaining momentum over the past few years. Additionally, a friendlier regulatory backdrop in Washington has contributed to this bullish sentiment. U.S. lawmakers are currently discussing clearer guidelines for the cryptocurrency sector, which could further legitimize Bitcoin as an investment. This evolving regulatory landscape is crucial for the maturation of the crypto market, providing both stability and clarity for investors. The recent price surge is particularly shocking when compared to previous all-time highs, as it reflects not just a speculative bubble, but a robust demand from institutional investors who are increasingly viewing Bitcoin as a viable asset class. The impact of this price surge extends beyond just Bitcoin. It signals a potential shift in the financial landscape where traditional assets may face competition from digital currencies. This could lead to increased volatility in traditional markets as investors diversify their portfolios to include cryptocurrencies. Furthermore, the influx of institutional capital could drive innovation within the crypto space, fostering the development of new technologies and applications. Looking ahead, analysts predict that if this trend continues, Bitcoin could solidify its position as a mainstream asset. The combination of growing institutional interest, favorable regulations, and technological advancements may propel Bitcoin to even greater heights. As the cryptocurrency market evolves, it will be essential for investors to remain vigilant and informed. The next few months will be critical as market participants assess the implications of these developments on the future of digital currencies and their role in the global economy. With Bitcoin's price reaching new heights, can this momentum be sustained? What are your predictions for the cryptocurrency market? Share your thoughts in the comments and subscribe for daily updates on financial developments.